InflaRx. Until the morning of November 10th, 2025, it was just another overlooked small-cap biotech, volatile, obscure, and often dismissed. But that morning, before the market had even settled, something unusual happened. The stock didn't just rise, it detonated. In a matter of hours, InflaRx shares surged over 40% on a single piece of news. It wasn't hype, it was data. Real, clinical, reproducible data that redefined a company investors had nearly written off. What unfolded that day was more than a price spike, it was the return of conviction. And before we explore how this shift came to life, stay with me until the very end. The complete trading framework, including actionable technical ranges and scenario modeling, comes later in this episode. For those watching on Shorts, you can click the full version link below to hear the uninterrupted story and analysis in depth. InflaRx NV, ticker IFRX on the Nasdaq, was founded in Jena, Germany, to tackle one of the most intricate and underexplored arms of the immune system, the complement pathway, specifically the C5a protein. For context, the complement system is a network of proteins that enhance the body's ability to clear infections. Among these, C5a acts as a molecular siren, recruiting immune cells to inflame tissue. When it's balanced, it saves lives. When it's overactive, it causes harm, fueling autoimmune and inflammatory diseases. Traditional pharmaceutical development has mostly targeted cytokines like TNF-alpha or IL-6, well-known mediators with decades of validated therapies. By contrast, targeting C5a is upstream, riskier, less predictable, but potentially far more powerful. InflaRx's decision to focus here set it apart early, both scientifically and financially. Investors weren't just betting on a molecule, they were betting on a new immunological frontier. The company's flagship drug, vilobelimab, is an intravenously delivered monoclonal antibody that neutralizes C5a directly. Monoclonal antibodies are complex protein drugs, typically manufactured through cultured cell lines and administered via infusion under medical supervision. They are costly, logistically demanding, and slow to develop, requiring multiple clinical stages across years before reaching approval. Yet in November 2017, InflaRx broke from convention by going public at $15 per share, while still in the development stage. Normally, biotechs wait until late phase 2 data to mitigate investor risk, but InflaRx took the unusual step of listing earlier, signaling confidence in its science and its ability to execute. That decision, though bold, introduced volatility, because in biotech, early exposure magnifies both potential and pain. Then came the first major turning point. In April 2023, amid the tail end of the COVID-19 pandemic, the U.S. Food and Drug Administration granted emergency